been a brutal earnings season, especially for tech stocks. But our next guest is a trader, and he thinks that there could be a bottom ahead for certain tech funds, and we'll go over exactly which ones he's flipping his stance on. Anmol Singh is back. He is the founder of Live Traders, and he is here to break down the technicals and fundamentals of the companies that he likes and dislikes. Welcome back to the show, Anmol.
Thanks for having me. Always good chatting with you.
Always good to have you. It's been a while since you were on the show. You've been short a lot of stocks and positions we'll cover again. And let's go over the macro first before we revisit some of your calls and positions. So as you know, the NASDAQ, terrible year, along with pretty much everything else. Let's go over just the last month now. As I mentioned before, brutal earnings season. Nobody seems to be bullish on tech stocks right now. But you told me offline you're flipping your tune on Cathie Wood's ARK. Tell us why.
Yeah, totally. So, primarily a lot of my thesis is based on technicals and based on the charts. And a lot of charts, they always seem to repeat their patterns over and over again. So once you learn how to read those patterns, you're able to, flip as per the position. So a lot of people were asking me when I talked about flipping Cathie Wood that, oh, have you changed your views on her? I don't hold views on anybody or in particular. I hold views on just the charts. So I think previously when we were on Kitco, we talked about shorting ARK and how, it could have a disastrous fall. It went lower than what I thought it would. And now, technically, if you were to, take a look, it's one of these charts that have come 360 all the way back down and right into a support area. So I think this is an area where there's less downside than there is upside, right? So it's not going to come back. My thesis on this is it's never going to come back to all-time highs. However, can I get a nice bounce from 34 back to 80s? And that's a healthy return. So I'm looking at it as a potential trade.
Did you just say never? Never say never, Anmol. Did you use that word? You use the N word.
I'm pretty confident. I've made a bunch of posts online. Roku's never going to come back. Zoom's never going to come back. These stocks will never, ever come back to all-time highs. Mark my words.
Okay, we're going to talk about those particular stocks in just a bit. Roku. Okay, but I mean, Cathie Wood's ARK ETF is an ETF. It's a fund. She's, in theory, flexible. She can weed out the bad investments and, invest in new things that potentially have more upside. So, is that in the cards? Is it possible that she can revisit her fund holdings and outperform again?
I think if she does, it's not going to be a comeback that's going to come back in like 2 to 3 years. It's going to be a long-term comeback. And, to her credit, that's what she's betting on. She's betting on a few of those companies that are going to become these unicorns, and rest of them are probably going to be worth zero. But as a trader, I try to take advantage of opportunities, such as obviously when you saw that it gets really extended here, we're taking a short position on ARK, right? And now when it comes back down into support, we're going to be flipping long. And, I'm pretty confident that we're going to at least get a bounce on this ETF. And the downside, not as much I'm seeing right now, maybe another $5 to $10 on this ETF. But I think overall, if you have a 3 to 5 year time horizon, I think this one's going to be a good one.
Okay. Well, she was, Cathie Wood is famous for a lot of things, but notably a few years ago, I think back in 2018, she made the call that Tesla would eventually one day go to $4,000 a share. Hasn't happened yet. We're nowhere close to $4,000 a share. In fact, I'm looking at the screen right now. It's about $199, barely at $200. Tesla's also had a rough year, rough quarter. It's missed earnings as well. Huge slide since the beginning of November, actually. Just in the last week, it's down 10%. What's your view on Tesla? Do you have any views just from a technical perspective?
Yeah, from a technical perspective, I've kind of maintained 140, 150 is where it's headed. And again, if you take a look at technically, it's a classic technical pattern. We break the trend line. We get a little, head and shoulders, which is a very classic pattern. And it broke that just today. So I think this stock is probably going to be worth $140, $150. But that'll be an area where I would be comfortable buying. I don't own any Tesla right now, but I do have some exposure because I bought recently ARK ETF, which has exposure to Tesla. But I think Tesla 140, 150, and I'd be looking to buy it there. But I think it's going down. Yeah.
You're going down. All right. What about the NASDAQ overall? Again, let's look at it from a technical perspective purely, and we can talk about specific holdings later. But the NASDAQ, again, it's followed a similar pattern to Tesla, has it not? Would you not be looking for a slightly more downside before it bottoms out, or do you think now is the time to get back in?
I think one thing, I'll be honest with your viewers, I've been pretty good at picking tops. Picking bottoms is not my forte. Picking bottoms, you can never time it correctly. It always takes longer than expected. Now, at these levels, I feel comfortable nibbling in. Historically, if you take a look, markets were down 40%, 43%, and that's kind of the historic level, even from 2000s, 2008, 1970s. That's roughly the mark where you start to bottom out, at roughly around 40 to 45%. As of this year, market's already down. The Nasdaq's down over 35% year to date. So I think it's a good position to start nibbling in. You're never going to time the bottom perfectly, but I think it's a good time to start deploying some capital. So that's what I've done. I've been on the sidelines after getting out back in. Last time I was on Kitco News, talked about getting out of the markets. Now I'm starting to get back in, but I'm not getting back in all. I'm still keeping roughly 30% cash on the side for a black swan event. And again, it could be anything. We don't know what it's going to be, but I'm keeping some cash aside in case things do get out of hand. But at the moment, I've been starting to deploy cash. I'm, deploying it on Qs, deploying it on ARK, and some of the other various cryptos and stocks that I own.
Wait a minute. You said, I'm just going back to your previous comment, you are better at picking tops than bottoms. Give us a brief tutorial here. What's the difference?
A difference is, picking bottoms. These, we've never seen that. If you take a look, previous declines have all been quick. I call it bungee cord, right? The bungee cord goes right back down, snaps right back up. Previous declines have been like this. This is a change in structure of the markets. And again, it's at a support area at the moment. So that's why I feel comfortable starting to nibble in. And again, there could always be downside, but I don't think we're going to go too much lower than, let's say, 200 on the NASDAQ. And that's also an outside possibility. But again, technically, we're at a support level. If we can hold here, then this is going to be a good term. And historically, 10 to 12 days after midterm elections, markets do get a healthy bounce. So as a trader, I'd be looking to take advantage of that. But technically, we are at a support level on higher timeframes. But if the Qs break 255, then all bets are off, and we could have an outside possibility to go to 200.
I want to bring something to your attention now. Bitcoin has been technically correlated to the NASDAQ almost in lockstep. But more recently, in the last couple of weeks to 2 months, it's been moving, it's been diverging from the NASDAQ. If you take a look at the Bitcoin chart, it's been mostly flat in the last couple of months. That's not the case for the NASDAQ. The NASDAQ has continued to fall while Bitcoin has held steadily around the same range. In fact, some analysts have noted that Bitcoin is now trading more closely to gold than tech stocks. Is this a coincidence? What's going on?
I think people are too quick to, jump into finding these correlations. Bitcoin is still a very relatively newer asset. I think finding correlations are just anything. One day it's correlated to NASDAQ. Next day it's correlated to gold. And it's always going to keep changing. And anytime there's a new asset or a new, financial instrument, the correlations are going to take time to form. So right now it's all speculation. It's always going to keep changing those correlations. But if you take a look, NASDAQ is down 35% year to date. Bitcoin's down more than that? It's down 50 to 60% year to date, more than that, in fact. So it's not really correlated, and it's not really correlated to gold either. I look at it as an individual asset and judge it based on the chart's own technicals per se, as opposed to correlations. I think it's a too young of an instrument to try to pick correlations. They're always going to keep flipping over the next few years.
Okay, so you don't think that Bitcoin maybe is an indicator for a bottom for tech stocks?
I wouldn't say it's an indicator for bottom of tech stocks. However, I do feel comfortable as a trader, as an investor, that at these levels, I could feel comfortable about buying it. Because again, you're coming back down. People always buy here. This is where they mess up. You always need to wait for pullbacks, and coming into this area of support, which was the last peak. I think it's a good spot. But again, there's always outside possibilities. That's why I tell people never just go 100% cash and wait on the sideline. Always have cash on the side in case of a black swan event. And that could be anything. Can
you just zoom out a bit? Let's take a look at this chart here. Zoom out. All right. So if you take a look at Bitcoin's historical price pattern, if you look at the last big rally in late 2017 and then the big crash that followed, we saw a period of consolidation that lasted for almost 2 years. Obviously, we haven't, Bitcoin's come down, but it hasn't been 2 years since the price has bottomed, at least the local bottom. But I'm just noticing a similar price pattern. At least initially, it looks like we're at the early stages of a price consolidation period. If you compare this to 2018, am I too quick to judge right now, or is there some semblance of a repeat of a consolidation pattern here?
I think that's kind of where we're headed. So in technical terms, we call it stage one. So there's 4 market stages: stage 1, stage 2, which is an uptrend, stage 3, which is sideways, and then stage 4, decline. And these patterns repeat over and over itself. So if I show you a couple examples of just that, let's take a look at Zoom, right? Same thing, sideways pattern, stage 2 uptrend, choppiness, stage 4 decline. Now back into stage 1, right? So these are the patterns that over and over repeat themselves. Let me show you another example. Roku, same thing. Stage 1 sideways, you get an uptrend, you get a little double top. Stage 4 decline. Now back into stage 1. Shopify, take a look at the same thing. Stage 1, stage 2, and then stage 4 decline. So if you take a look at it in that measure, Bitcoin is sort of forming that same pattern. We had the stage 1, we broke out into stage 2, double top, back into stage 4. So this sideways pattern, what it's trying to do is trying to form exactly what you're talking about here, which is the stage 1 base. And I think that could take a while. I think crypto at these levels, I feel comfortable buying, but I'm not gonna say it's gonna be one of those rallies that comes back up like we've had previously. This one's gonna take a while. And even the market recovery, it's not going to be the recovery that we've all been used to, buy the dip and they're working every single time. I think these declines are going to form a longer term consolidation. And I think around 2024 or later is when we start to get into the next bull run in the NASDAQ as well as cryptocurrencies.
All right.
It's going to take a few time.
So flat until 2024. But Anmol, is it possible that this stage 1 consolidation could break down to the downside? I'm just looking at this chart in particular, and it doesn't look like it's done that before, or at least not often. I'm wondering if this time could be different.
So I think there will be, because one thing I have noticed is things don't really bottom out until there's extreme fear. And even though the markets are down 35%, even though cryptos are down 60%, I don't think there's fear is being felt on Wall Street or anywhere else, right? People aren't feeling that pinch. So I think there's going to be one potential move down, something like what happened here in 2018, where we were in that sideways pattern, a little breakdown, right? That takes out support. You get a massive volume spike that sets the low, and then we take off. So by that measure, it's possible that we're going to get this one sideways break to the downside, which will make people think that, support levels are breaking. Maybe it's time to get out of Bitcoin. And then that's going to probably set the bottom and result in an uptrend. So I think there's going to be that one new low. What might cause that? I don't know. But I think there's going to be that one little shakeout and a volume spike, just like what happened in 2018. What's
the low that could make sense to you?
I'm thinking about 13,000 is kind of the level. Like if it gets there, I'd definitely be looking to, buy some Bitcoin. So 13,000, I think, is where it's eventually headed. Although as a long-term investor, there's a difference between trader and investor. As a trader, you got to be really good at timing things. But if you're an investor, I don't see anything wrong with dollar cost averaging. Like if you're buying some here, holding some cash in case you get an outsized possibility to 13, then that's where you could look to add.
Okay. Put it this way, Anmol. If you're an investor, you're probably wondering, well, what's the upside? Now, you said that things like Roku, ARK may never see its previous all-time high. What about Bitcoin?
So Bitcoin could see the comeback, because if you notice, each peak is higher. The same thing happened back here. Stage 1, this is 2018-17. Stage 1, stage 2, stage 3, stage 4. It happens on every single chart. So now we're in the new stage 2, but this is higher. As long as we can hold 13, I think Bitcoin's a great asset. And I think as long as this low is higher than the previous lows, we could still be coming back in an uptrend. But I will say it's not going to be quick. It's not going to be what people are expecting, that it sets a bottom and then it's back to 100,000. I think it's going to take a few years for it to come back. And it's going to be a slow comeback now. Now it's a much more mature instrument than it was before.
I'm guessing those bars at the bottom, those are volume?
Yes, these are all volume candlesticks. So until the no bottom are usually set until you get a high volume spike. Every bottom, every
Why
top
is volume so low right now? I mean, you would think that during a bear market, there should be more volatility, should be more trading in and out. And if you look at the past bear market, take a look at 2018, huge volume compared to now. What's going on right now?
Yeah.
People just don't have money, or they don't care, or what's...
But the other thing also helps is to put dollar volume on the chart, because this just shows how many Bitcoins were bought and sold. When Bitcoin was 9 or 10,000, you could buy a lot more Bitcoin than when it's at 60,000. So volume is going to be lower. So I think it helps to maybe not have the regular volume, but have a dollar volume. Okay. And then you see the volume might stabilize a bit. But the other thing also is, when there's pumps, when there's hype, when everything is going up, when the metaverse, the virtual yachts, people buying virtual lands, when things are at its high, people are really excited. And we call that the greed phase, which is the top of the market. And so I think if people have deployed a lot of their capital, they didn't perhaps keep the cash on the side, and they kind of went all in. And I think that's one of the things that's happening right now, is not new money isn't really coming into the asset.
I've heard from traders, certain traders that told me in the past that whenever volume has been consistently low for a while, that could be a contrarian indicator to get back in, because that shows disinterest in the market, either from the downside or the upside. And if you're a long-term investor, you don't want to be getting in when everyone's hyped up. You want to be getting in when people are disinterested. Is that true?
Absolutely. And I've been using that not so much on Bitcoin, although I do have some long-term Bitcoin, but using the ETF BITO rather than having actual Bitcoins. So I have some ETF BITO, but what I've been doing is a similar thing, and is an altcoin. So if you take a look at Algorand, right, same thing, stage 1, stage 2, stage 3, stage 4, back into an area of support. And now you can see the volume is picking up, and it's actually been outperforming like Bitcoin and Ethereum over the last few days. It's been actually in its own little bull run with volume picking up. And I think FIFA World Cup's coming up soon where they're going to be their official partners. So I've been looking at this one. I've been loading up all throughout the stage 1 when the volume was low, but now you can see it's starting to pick up again close to the World Cup coming up.
Okay. But how do you feel about tech stocks versus consumer sentiment? I want to show something very interesting to you. If you take a look at the Michigan Consumer Sentiment Index, now the consumer sentiment measures, it's a survey of consumers, and it measures basically their optimism for their future financial conditions. That has been, again, closely correlated to the NASDAQ, but more recently the correlation has broken down. I'm just finding patterns here. The NASDAQ has continued to trend lower, while the consumer sentiment has actually been trickling up, if not been revised upward. I can't offer an explanation as to why, because everyone I talk to are tightening their belts and are worried about a recession. But that's just what the indicator shows. Do you think that perhaps it's possible that the NASDAQ has been oversold fundamentally because consumers are still willing to spend money during the holiday season? Perhaps the next earnings season would be a surprise to the upside. I'm just speculating here. What are your thoughts?
I think, again, looking at it technically, I do think it's at a level where I feel comfortable as an investor deploying capital. But again, the consumer sentiment, the thing is, I don't know, maybe we've been hanging around different people. The people I've been hanging around, they're not feeling the pain. They're like excited. They still have cash on the sidelines waiting to deploy. Even real estate market, when people were talking about real estate coming in or tech stocks coming in, I have literally people just waiting with stacks of cash waiting to deploy into the markets. So
what are they waiting for, Anmol? What's the key? What are they waiting for?
I think everybody thinks there's going to be something. We don't know what it is. There's going to be a one black swan event, which is going to cause, a big decline. I don't know what that's going to be. I'm also speculating. But again, as an investor, I think it's a good spot to start deploying capital, but not going all in. I'm keeping, as I said, 30% cash just there in case. If not, I'm still deploying about 70%. So again, I'm not sure people feel the pain just yet. And usually markets don't bottom out until people feel the pain. Like even take COVID, when the markets dropped extremely fast, there was a lot of fear at that time. And we got a nice rally comeback. And I don't think people feel that anymore.
I don't know what a black swan event that's going to trigger a correction or a crash. Nobody knows. It's a black swan. But I'll tell you what the problem is, Anmol. Like you described, everyone's waiting. That becomes a self-fulfilling prophecy. Instead of deploying capital, the markets just hang around on the sidelines. Yeah. Everyone's on the sidelines. Everyone's just in limbo. Eventually, liquidity is going to dry up, and that in itself would cause problems. I'm not saying people should start buying things now and reinvigorate the economy with the market somehow. I'm just saying that everyone waiting on the sidelines can't bode well for confidence.
Yeah, and I think that perfectly aligns with like my research and my technical bias, which suggests that markets aren't just going to have that snapback that we've always been accustomed to. It's going to have that period of 1 or 2 years where everybody's just either waiting for something, not deploying the cash, and then we get that self-fulfilling prophecy where we're just kind of chopping around up and down for a little bit. So there's going to be, I call it like the dead period. I think next year is going to be that. It's not a bad period. It's going to be just a slow period of nothingness. But I think around 2024, markets should be ready to come back. And historically, anytime beyond 35%, it's always been a good spot to buy. And each and every single time, markets have come back. So just using that as a pattern on itself, I feel good about starting to, I call it nibbling into the markets right now.
Why 2024? You've said that a couple of times now.
I mean, it does align, with the election, obviously, that's going to be happening. And it does align with that period. Technically, those charts, as we were talking about, that sideways period, just like even Bitcoin had, that sideways period typically lasts about a year or two. And we're already in 2023, if you take a look. So a year or two from now, 2024, somewhere in the middle, I think that's where the stage 1 consolidation process will be ending. And then we're going to start to see that push. I hope it happens sooner. I've already started to deploy some cash, but I think it's going to take about a couple of years from now.
Okay. And you said earlier that people haven't really felt the fear. Now, from a trader's perspective, how do you know that there is fear in the markets? Because one could say, look, Anmol, look at the charts this year. Bitcoin's down, what, 60%, 70% from its highs. The NASDAQ's down 30%. I mean, from a multi-month perspective, maybe there was fear. Maybe you're defining it differently. How do you know?
Yeah, so I think the human psychology is when something is slow and steady to go down, we're very adaptable human beings, right? We adapt to what's happening and we get used to the price action. So when the markets are slowly going down, people adapt to that really quickly. So they don't feel the fear as much as when, let's say, during COVID, when we had that hard and fast bungee cord. That's fear right there, where the markets came down extremely fast. And you can see the volume. Notice the volume here. This is the highest volume we've ever seen. That's when you know everybody was fearful and everybody was either selling off, don't know what's going to happen with the economy. Is this going to be a plague that's going to last forever? That's how you can tell fear. Notice this big volume spike, the highest we've ever seen in all of throughout this chart. That's when you know people were either, I call it like just giving up, selling out of the markets. The stop losses are getting triggered. And you could see that using volume. So when you notice the volume now, it's not as high. In fact, it was higher here, right around the tops. So I think until the volume picks up, you're going to get that volume spike. You're going to get that quick fear down. Until then, I don't think the markets are going to set a bottom. You know, the alternative scenario is just a, as I said, sideways period of slow accumulation of volume, and then it takes about a year or two to come back.
I remember the early days of COVID 2 years ago. I mean, it felt like forever, but it was just 2 years ago. And yeah, you're right. Everyone thought the world was going to end. Is this plague going to last forever? Is this four horsemen of the apocalypse visiting us now? But, you know, we become desensitized. Now we have a recession on our hands, and people are like, meh, we've seen worse 2 years ago. And that's exactly what you see. There's no fear, even though it is a, you know, by most counts, this should be a bad economic recession. But people just aren't feeling the fear. I wonder what's going to cause this next fearful moment that's similar to COVID.
The UK already, I think, declared, it was yesterday or a couple of days ago, that UK declared that they're in a recession, which is going to last a few years. So that's going to be something too interesting. Again, by the nature of Black Swan events, nobody really knows what it's going to be. Could be anything. Could be something to do with war. Could be to do with oil, you know, really getting really, really expensive, which is absolutely possible. So we don't know what the scenario is going to be that's going to cause it. But there's going to be something, you know, like even I think a couple of years ago, around the COVID area, when I was on Kitco News, we were talking about, I don't know what it's going to be. Market's going to come in. I feel like the market's going to have a pullback just technically, and then happen COVID. I wouldn't have known it's going to be COVID, but something always seems to happen at the right time. It's crazy.
We'll follow up, and for sure, when something hits, we'll have you back on. But let's finish up on trades now. You said you're deploying cash. Where, Anmol?
So I've been buying NASDAQ. I've been buying the Qs itself. I'm not trying to be an individual stock picker right now. What I've been doing is I bought a little bit of Qs, and I bought a little bit of Cathie Wood ARK, which I was short for a long time. But again, noticing this stage 1 consolidation, noticing Tesla having the pullback as well, I feel that this is a good area to start nibbling into the position. So I bought a little bit Cathie Wood ARK. I bought QQQ. I bought MSOS, which is the cannabis ETF. This is more of a speculative play for me, but it's more on the lines of if the Safe Banking Act is passed, there's going to be some M&A activity in the cannabis sector, because it's a very fragmented sector with like a lot of cannabis different companies. There's a lot of supply. So I think there's going to be consolidation in that sector with some M&A activity if the Banking Act is passed. So I've been getting in some MSOS. Today I had a little bit of platinum, bought some PPLT, which is just a platinum ETF. So I think the dollar has been extremely strong and it's going to have a pullback. And when the dollar starts pulling back, that's when you're going to see platinum, gold, and silver finally start to make a move. I've not really been doing much with gold, silver, but I did buy some platinum. So it's the same exposure per se. And on the crypto front, I already talked about, which is Algorand.
Okay, Algorand. All right. And so just on the dollar, the point about the dollar, you said eventually when it starts pulling back, it'll be good for the other metals. Again, what would cause a pullback? Is it the Fed slowing down rate hikes, pivoting? War?
Well, I'm looking at it from a technical perspective. Each and every single time it has got extended like this, we've always had a snapback rally every single time, right? So if you take a look at it again, it's extended. You get the highest volume spike that we talk about, which is usually signaling end of the move. So dollar's going to have a pullback. On the UUP, this is the ETF that I'm looking at. And when the dollar pull back, because it has inverse relationship with metals, it has inverse relationship even with the stock market. So as the dollar pulls back, I think you're going to start to see those things bounce. The real question is, does it pull back and continue? That's the real question, which we're going to, I guess, find out.
Finally, give us a pair trade. Something you're long, something you're short. An idea.
Believe it or not, people are going to probably give me a lot of hate for that, but the pair that I am doing as a pairs trade is Bitcoin, Algo BTC. So which that does is you're technically short a little bit Bitcoin and you're long Algorand. And that pair for me has been a great trade. It's been making new highs. So that's what I'm looking at, is the use cases and things of that nature. And as they start building, you can see Algorand against Bitcoin. If you not look at the Algorand to dollar, but Algo to BTC, it's actually been making new highs, just made a new high today. So I've been doing that as a pairs trade on Algo BTC.
Okay. Well, before I let you go, then just give us a few use cases of Algorand that make you bullish.
Well, right now FIFA World Cup's coming up in Qatar, and obviously that is the biggest sport. You can take NFL, NBA, all of them combined, and it's way bigger than that. And Algorand has the exclusive, I guess, partnership with them to create all of their NFTs that are going to be on Algorand. Even the ticketing, you go to the stadiums, the ticketing systems, all of that are built on tokens from Algorand. So I've been seeing these use cases in Nigeria. They have something going on there with the patents of the whole country going to be built on the Algorand system. Their IP is going to be stored there. And they're just building the decentralized finance sector on Algorand. Was very, very immature a few years ago, but now it's gaining steam, it's gaining momentum. And you can see that in their total value lock, the TVL. It's been steadily growing. So again, there's a bunch of use cases. It's still very early. As you know, this only came in 2019. So it's still very, I call it the baby in the crypto space. But I think over the next few years, you're going to start to see, I think they launched recently their state proofs, and you're able to bridge a lot of your assets from one asset to another. So all those things and the lower transaction costs are eventually going to play out in the next bull run. Again, we're not in a bull run yet. We're still in a bear market. These things could still be really volatile and have these snapback comebacks. But I think in the next bull run, this is going to be gaining steam. That's just my personal opinion. People can do their own research on that.
Perfect. All right, Anmol, appreciate your thoughts. Thank you for your time. And I'll look for you next time.
Always great chatting with you.
Thank you for watching Kitco News. I'm David Lin.